Hello, welcome to the guide. Welcome. This is the guide. I'm gonna start. Go straight to the point so we can save ourselves some time, and so that this wouldn't take forever. Um, let's get to it. So, okay, right now you're looking at your tool. This is how you'll get it. This is the ultimate Excel record keeping tool. First of all, like always, I put the name of my business. We call it Joanna. If you like your currency, that's easy peasy. Let's say Naira, whatever it is. The fact that we have the currency here doesn't change anything in, the other tabs. Reason is when I put the currency, if I automate it, the file becomes bigger. I'll teach you how to do that by yourself. Anyways, so straightforward, first thing you want to do is to list your products or services. You could either do that by going to this tab or just come into guidance and clicking on service or product type, right? Now, please note that on this file, on this, sheet, you have to go to the extreme right to column Q to list out all your services. So for example, you can see this. I kept some examples in there for you. All I'm going to do is to just hit delete button and they're gone. So, let's start again. Let's just use, let's say I sell shoes, bags, tops, and then I do service delivery, right? Let's say I do service delivery too. Okay, just to make it easy to do a business that does both, products and services. Now I've listed those services and I'm going, what's today's date? I'm gonna, just put May 21. Okay, this is always automated. Now in this column C, service or products, you can see all the products that you've listed. What you want to do here is to make sure you key in all your products or services and put the cost to, to yourself and how much you charge to your customers. So pretty much the cost and then the selling price. So here, let's say, day one of my business or on May 21, I bought 100 pairs of shoes, right? I'm just going to put 100. What is the cost? Let's assume I bought each one 3,000. You can see this does come up automatically. Here it asks if you bought it from your supplier in credit or in cash. This matters a lot because if you bought it on credit, it means you have a payable or you owe a supplier. If you bought it on cash, it means your cash will reduce, right? So, before we even go down to all of this, I just remembered something. I will quickly go ahead and I'll make this credit, right? You can see it's cash or credit. I'll make it credit and then, here you can decide to put a margin. The margin is how much you want to add on top of the cost to get to your selling price. If you want to do that, it's fine. If I say 500 is my margin, my selling price becomes 3,500. But if I don't want to use the margin, I could just delete margin and come here and say 3,500. That's fine, absolutely fine. Any way you want to use it. Some of you already have your products and you have the amount that you sell for, and you don't have the time to put in margin. This just wants to make your life as easy as possible. Now, before I come back here, there's something I remembered. Just think about it. If you're starting a business, let's assume you're starting a business. The first thing you do is you inject money into that business, your personal money into the business. Now, um, people have been, wondering how do you do that? Without any knowledge of accounting, this Ultimate Excel record keeper now does that for you. You see where you have the yellow capital, where you have the yellow tab. You can just say, okay, on this day, Femi decided to put 1 million into his business. Boom. Once you type that in, capital, basically, this is your investment into your business. It will show up on your balance sheet. Let me see. The balance sheet says you have a capital of 1 million, right? Boom. There goes your 1 million in there. Now, let's go back. You see numbers here because I've done examples in the file and you have numbers here. So I'm going to clean out all the numbers on this file, everything, so that you can see exactly how this works. So let's start from here to list of services and say, you know, let's clean this out so we don't have any issues. Obviously here we have no sales, of course. Let's come to our expenses. Let's take this out. Let's just take this out. We'll take that out. Let's go to capital. Let's take it out. Okay. You know, this are my assets. Let's take it out. Let's take the cost out, right? Let's take that out. Let's go to inventory. Okay. We'll get back to this. I'll show you how this works. Now, when you look at your balance sheet now, if you take all of that off, just by getting it. Now it's blank. You have no cash, you have no receivables, no capital, nothing. So what do? Let's assume you started your business. Joanna, Femi decided to invest ₦1,000,000 into this business. It could be 1,000,000 cedis, it could be anything. So we go one, that's 1,000,000. You enter that in. Now remember I told you if you are very keen about the currency you want to show, you can just do this. You can come here and say number, I want currency, and then go to symbol and pick whatever. If you want it to be the naira is right here. If you want it to be Ghana cedis, you can look for that. I can just go G, hit G here, and then look for GHC, I believe, and then say okay. See, that's it. You can change the currency anytime, whatever you want. It's all on you. Now that you said you've invested capital, what does that mean? It means you took money from your own bank account, you put it in your own business's bank account as capital. Now, what does this tool do for you? It just looks at it and says, okay, good. Now you have 1,000,000 naira or cedis, whatever it is, in cash, and you have 1,000,000 in capital. Your balance sheet is already doing your work for you. Easy as that. Now, because I have 1,000,000, then what else? What am I going to do? I want to buy products that I will start using to, that I will start trading, right? So let's assume now these are the three things, products that I want to be selling: shoes, bags, and tops. And then I want to start, a service delivery business as well. So probably I need a bike. So I want to buy a bike and I want to buy inventory. So let's start. Now that we've keyed in shoes, bags, tops, and service delivery, and I come here, I say, okay, maybe I bought 100 pairs of shoes. Now going back to where we left off, and I bought it for 3,000, which means, it's 300 grand. If I paid cash, this is why it's important. If Femi paid cash for this from your supplier, make sure you put cash. Now, what does that mean? Once you put cash, look at what your balance sheet does. Your 1,000,000 is no longer 1,000,000. It's now 700,000 because you've spent the 300,000 to buy inventory. You see how your balance sheet just does the magic for you. But just make sure you click on what it is. Now let's assume I have a supplier that doesn't get his money on time and takes his money later, and I decide to say credit. Now it means I took the products, I took 100 shoes without paying outrightly, telling my supplier that I'm going to pay him or her later. So when you look at the balance sheet, what happens? Your cash is intact because you've not spent the cash. However, you have an inventory worth of 300,000, and what? You have accounts payable, which tells you you're owing someone 300,000. Your balance sheet is just doing the magic. That is why this is very powerful. So let's just go back and say, okay, now it's 3,000. Maybe I don't want to use the margin. If I want to use the margin, I could put 500 there, but I want to sell for 3,500. You get the idea. Now I come back here, put the same date, maybe the same time I bought a bag. So just I bought bags, and let's say I bought 50. I bought it for 1,500 each, and then this time I decided I paid cash because the supplier wouldn't agree to take so you can decide to put your margin, maybe 500 bucks. Now you see your selling price is 2,000, right? Again, I want to enter, what else did I buy? Maybe tops, right? tops. About tops for about 20, maybe 50 tops. About each one for 2,000. And then, let's go cash again because I need to pay. Also, I could not, get that on credit. And I want to start selling it at, 750 a margin, or, I could just go here and put 2,750. Now I've put all the three products. Of course, I now want to put my service, which is, what do we call it? Delivery, right? Service delivery right there. Now, I have no quantity because it's service, right? Ignore if service. You see that? However, what's the cost? I've told myself that anything within Lagos, I want a fixed price. Let's assume, right? I want a fixed cost of 3,000. Let's just make it easy, 3,000 naira. And now I'm saying, there's no cash or credit because I didn't buy that. But if it is 3,000 for cost to me, because I've estimated it, I think it's going to cost me 3,000. I want to be charging my customers 4,000. I could decide not to put a margin and just come here and put 4,000, right? Now I have the selling price or the service charge for that product. Now, when you think about it, I want to be doing delivery, but I need to have a bike, right? So I look at my balance sheet and I said, okay, on my bank account, I have 825,000 left. So then I go to the market and I decide to buy on the same day, 5/21/2021. I decide to buy what? You could call it this time, because we don't have a bike. If you want to call it equipment, I would want to put it in vehicle type, so it's still okay to just say vehicle. Then here I want to say Suzuki bike, right? Let's say, let's take this out, the duplex and the building below it. Let's say this time I bought a Suzuki bike, 300,000. I have to put that in there. And then now I've researched it and it says, this Suzuki bike, its lifespan is pretty much maybe 5 years due to all of the work it's going to be doing. So I'm going to put 5 here, and then it's just going to calculate the depreciation. Now look at this. Because you bought it in May, it's smart enough to start picking it up from May. Look at that. If you say you bought it in January, look at this, 01, or just say Jan 15. Look at what it's doing. It's telling you now that it's depreciating it from January. So I'm just going to undo that because we bought it in May. Now, what does that do? Now, there's another question here. Did you buy it on cash or credit? We bought this on cash, right? So I'm just going to say cash. Okay. Now that I've said cash, look at my balance sheet. It has deducted the 300,000 from my bank account automatically, and it has said now I own a vehicle, which is obviously our bike, worth 300,000. It's as easy as that. You don't have to stress. It does all of that for you. Now let's assume it's day one of business and you started selling. So you want to come here and say, let me take all of this out, so that it's not confusing. Let's take all of this out. Customer, let's say, it's still May 21. You put the date, that's all. Femi, maybe Tunde comes in and buys shoes, maybe 2 pairs of shoes. But shoes, you click in shoes, you put the quantity, 2 pairs. Now, maybe you've known Tunde for a while. Make sure you put Tunde's name. And then Tunde says, hey, I can't pay cash right now. I'll pay you at the end of the month when I get my salary. You want to make sure this is not a cash sale, right? Obviously, that says now you have a receivable. If you are a small company in Nigeria and you do not charge VAT, value added tax, make sure this is no. But, if you charge VAT, always click yes. Let's assume I charge VAT. Once I click yes, it's just going to calculate the VAT. If you're not in Nigeria and your goods or services tax or your VAT percentage is different, just key it in here. If it is 5% in your country, just put 5% and it changes. If it is, 7.5, just leave it at 7.5. Now, what happens? You've charged the VAT. You are just an agent for the government. You're taking the VAT from the customer and you're going to remit it to the government. Look at this. It says VAT remitted to government. You have not remitted it. So make sure this says not remitted. Now, when you look at this transaction, a couple of things have happened. You sold 7,000, right? Your cost per shoes is 6,000. You have charged VAT, which obviously is not a sale to you. It's just going into your bank. And then you also have a payable to the government. Like you owe the government, right? So look at this. When you look at your balance sheet, it's telling you your cash will not change, obviously, because you sold it on credit, right? Yeah, you sold it on credit. However, your cash will increase um, based on, the VAT. Because now, when you think about it, even if today is buying on credit, you want to make sure that the VAT is collected. So pretty much, today wants to buy on credit. You're thinking, okay, yeah, today you can buy on credit, but you still have to pay the VAT now. Depends. If you decide not to take the VAT, you have to know that you're owing that to the government because you've sold it and you pay VAT. But if you don't pay VAT, all you have to do, or goods and services tax, is to say no, right? When you say no, your balance sheet has nothing for VAT payable. Let's go back. I'll show you. Let's go back. Let me say yes. And your balance sheet is already picking it up that you owe the government 525. You see how that works? Pretty simple. Now that you've sold to Tunde, let's go back here and say, it's a cash sale. Let's assume, down the line, you've listed a lot of things that you sell per day, and you're wondering, oh, who are the people that owe me money? I need to be able to go collect my money. What do? You just go to this receivable agent, because anybody that owes you money pretty much is a debtor, and you have a receivable from that person. So if you go to your receivable agent, you can see that Tunde is showing up here. It's owing you 7,000, and this tells you the number of days outstanding, right? That the debt is outstanding that Tunde is owing you for. It's still 0 days because it took the credit today. Now there's a button here that all you need to do is to hit, and it refreshes and it shows you the total debt outstanding and the amount. Now there's also a slicer here where you can click on. Let's assume you have a lot of people, Femi, Jide. You can just say, okay, I just want to see Tunde's bill. What does Tunde owe me, right? Now, if Tunde decides to pay you at the end of the month, it's easy. You can just go May 30. Tunde paid 7,000, right? Now, when you look down, you can see that now you have no outstanding. But every time anything changes, you have to hit the refresh button to see that Tunde now owes you nothing left. But do not forget, let's take this out. This was also an example. Do not forget that once this happens and Tunde has paid you in full, you have to go back to your sales and now say, okay, now that Tunde has paid me, I need to change this to yes, because it's now changed from credit to cash. Now that cash will be remitted in your cash in your balance sheet. Easy peasy, right? You see how that works? Do not forget, if you make a credit sale and immediately you've retrieved the money, just when the money is retrieved in full, come back here and change it to cash sales. Now, also imagine that you decide to remit all your VAT to the government. Immediately you remit it, it's leaving your bank account. All you need to do is come here and say remitted. Once you say it's remitted, let's go look at what the balance sheet is doing. You no longer hold value added tax. It's now 0. Your cash has reduced by the 525. Easy peasy. Life is good. All you need to do is to just, make sure you enter the data as things happen. Now, let's talk about inventory manager. You buy, you sell. Okay, let's take another example. Let's say on the same day, May 21, Kunle came in and bought bags for his wife, maybe 3. Then you want to put Kunle here, and then let's say Kunle paid, was it a cash sale? Let's say yes. Okay. Now, if you take VAT, you can say yes. If not, let's just leave that. If you do not, remit VAT at all, that's fine. You can leave that as VAT on goods, no, and that's great. So now that you have this, you're wondering, oh, I just want to see how much inventory I should have left. It's straightforward. All you need to do is just go to your inventory manager and say, hit this refresh button. Look at this. It tells you have shoes, 100 pairs of shoes. You've sold 2. This is how much you have left. Bags, you bought 50. You sold 3. This is how much you have left. You've not sold any of your tops. You have 50 left. Now, when you come here, you can decide to pick just, I want to see just shoes. And it tells you have 98. If you want to see bags or tops, you have 50 left. Easy. It tells you everything, right? So that's your inventory manager. It just helps you to keep an eye on what you should have left in your inventory. And if you do an inventory count and this doesn't tie, then you know that it's either something is stolen or something is missing, or the count missed one of your items. So that's how that works. Now, most of us are very interested in our income statement. If you're new to this, you've sold, you've recorded costs. Look at what your income statement is saying. It's just telling you so far your expense, which is depreciation, has already been keyed in, and you have a loss of 2,500. Now, one more thing that we haven't even touched here is the expense. Let's assume, you also paid CAC registration, or you registered your business, whatever it is called in your country, and then let's say you paid 20,000 cash. This is an expense, right? Look at your income statement. It picks it up immediately. And now you can see that you have it on the go from day 1, May 21st, you have a loss of 22,500. And it tells you your expense percentage of sales. Your expense is 192.3% more than what you've sold, which, is understandably so, because we are just assuming this is a new business. The more you sell, everything pops up. And look at your balance sheet, it's always there. It tells you the value, the total value of your business so far of Joanna, with a bike, all the assets, depreciation is 1.277 million. So you know that so far the value of your business is this. If you eventually one day want to sell your business, this tells you everything. Now, this is one thing you have to remember, and maybe reach out to me if you forget at the end of the year. At the end of every year, once you're done and you've taken a snapshot or you've printed your balance sheet out, you have to hit this button so that it rolls forward the balance from 2021 to 2022. And how do you do that? You don't need to get any new tool. All you do is you save this, you hit save as, save it as income statement and balance sheet 2021, right? Let me do that. If you do save as, you just put 2021, then you come back and save as, you save the tool again as 2022. Then what do? You come to your list of products, you clean everything out except your column Q, of course. And then once you clean everything out here and you clean everything out of your sales, your income statement is back to blank. Your balance sheet continues. You don't, balance sheet just shows you the balance at every point in time. So that's easy. I always talk about the payee tool, which is the pay as you earn. If you want to use this tool to just put your employee's name, easily I could put Femi and say, I use UBA, United Bank of Africa, account number, I don't know, I'm just going to put that in and say, let's say I get paid 100,000 a month. So you key that in January. If you key that in January, look at that, because that's an expense in your income statement, it's picking it up as salary. Well, like I say, you don't have to use this. If you don't like this, Typically it will be in May, right? I just did an example in January, so you see. So if you don't like this, you can decide not to use this and just include the salary and expenses, right? Just say um, May 31 and just say salary Femi 100,000. Now income statement has picked it up, but this time it's just going to be part of your other expenses, right? So this is pretty much how it works. Do not forget, when you get to your, your capital, when you input any amount into your business, you can record it here. You can keep recording it as it happens. If I decide to put another 500,000, I'm just gonna put it here and say May 21 or whatever day. My balance sheet picks it up. My cash has increased by that much. My capital has increased by that much. You can see your capital is 1.5 million right now. So, this is how sweet it works. Everything works for you. You don't have to stress. And from your guidance, you can see, you can even click on your receivable agent from here. You can go back, click on your income statement. You can go back, click on your balance sheet. You can go back and click on your inventory manager. Hopefully, this explains everything and it's all you need to know. Kindly, I don't want this video to take too long because I don't want to bore you too much with this practice. It is straightforward. Just please follow as we did it and do exactly as instructed, and you will be great. This will save you a lot of money. So thank you for watching. And if you have any questions, there'll be frequently asked questions. Let me know, and I'll be glad to help you. So hopefully I don't want this video to be beyond 27 minutes because it's already 26:43 right now. So anyways, hopefully you enjoy your tool, and thanks for buying this. Bye.